Thank God it's Friday, but before you get into the weekend, let's do 55 minutes of business here on Business Incorporated. Here are the stories we have for you today. Inflation numbers are out in Nigeria. Inflation is now above 31%. Food inflation above 37%. And in Kenya, doctors down tool, turning patients out from public hospitals. It's not a good picture for Zimbabwe as we see business activities decline. Welcome to the program. I'm Ini John Mekwa, and let's head into the global space. First, starting with what's happening in the global grains market. Chicago wheat futures were largely flat on Friday, with the market on track for a third weekly decline on pressure from Chinese buyers cancelling shipment amid plentiful global supplies. Corn firmed while soybeans slid. The most active wheat contract on the Chicago Board of Trade was unmoved at $5.32 for a quarter of a bushel. Corn added 0.3% to $4.35 a bushel. Soybeans shed 0.1% to $11.94 a bushel. For the week, wheat is down 1%, having lost 6.5% in 3 weeks. Corn is down 1.1%, while soybeans have added nearly 1%. Chinese wheat importers have cancelled or postponed about 1 million metric tons of Australian wheat cargoes as growing prices lower. This news came after the U.S. government reported cancellation of more than 500,000 metric tons of U.S. wheat exports last week to China. Cancellation of shipments by China, which is the world's #1 wheat buyer, are heightening concerns among exporters over rising world surplus. And closely related to that, Egypt, a major wheat importer, has set the procurement price of local wheat at 2,000 Egyptian pounds. That's about $41.32 per adrip, and that makes up about 150 kilograms. That's for 2024-2025 season. Cabinet statement said it raised the procurement price from 1,600 pounds previously announced in November for the 2024 season, which was worth $51.86 before Egypt devalued its currency last week to curb rising inflation. On March the 6th, the Egyptian pound was cut to about 50 to the dollar from just under 31 pounds, where it had been fixed for the previous 12 months. Since then, the pound has gradually strengthened, according to traders. The local wheat procurement price for the 2023 season was $48.59. That's about 1,500 pounds per adrip. In the metal space now, gold eked out gains on Friday, but was set for its first weekly drop in 4 weeks, as surprisingly hot U.S. inflation readings prompted traders to rethink on how swiftly and deeply the Federal Reserve could cut interest rates. Spot gold rose 0.3% at $2,168.10 per ounce. Apple was on track for a weekly drop of about 0.5%, its first since mid-February. U.S. gold futures edged 0.3% up at $2,173.40. U.S. producer prices increased more than expected in February. Consumer inflation also showed some stickiness in inflation. High inflation adds pressure on the Fed to keep interest rates elevated, weighing on non-yielding assets such as gold and increasing appeal for bonds and lifting the dollar. 10-year Treasury yields rose nearly 20 basis points to 4.2786% this week, and the dollar index gained about 0.7%, set for its largest weekly gain since mid-January. A firmer U.S. dollar makes gold more expensive for other currency holders. Let's go to the oil space now. Prices edged low on Friday, but were on track to gain nearly 4% for the week, boosted by the International Energy Agency revising its 2024 oil demand forecast higher and an unexpected decline in U.S. stockpiles. Brent crude oil futures fell 25 cents, that was 0.3%, to $85.17 a barrel after crossing $85 a barrel for the first time since November. On Thursday, U.S. West Texas Intermediate crude fell 22 cents, that's about 0.3%, to $81.04. The gains this week have come despite the US dollar strengthening at its fastest pace in 8 weeks. A stronger dollar makes crude more expensive for users of other currencies. Also supporting oil prices this week were Ukrainian strikes on the Russian oil refineries, which caused a fire at the Rosneft's biggest refinery in one of the most serious attacks after Russia's energy sector in recent months. Staying in the oil space, but in Nigeria, the Senate has dismissed media reports claiming that it will expose all frauds associated with the contracts and management of the turnaround maintenance of the nation's refineries. This is in reaction to a news report last week that claimed that the Senate, through its ad hoc committee on investigation of turnaround maintenance in the nation's refineries, has vowed to expose all frauds associated with the contract and management of the process. Chairman of the ad hoc committee, Senator Ifeanyi Ubah, said he was quoted out of context. Responding, the CEO of NNPC, Mr. Mile Kyari, who drew the attention of the ad hoc committee to the news report, assured Nigerians that the delivery date of the Port Harcourt and other refineries remain sacrosanct. He assures that after mechanical completion of the PHRC, that's the Port Harcourt refinery, in December, there's now about 450,000 barrels of crude oil already stocked in it, and the refinery is currently undergoing regulatory compliance tests before it to be restreamed. He assures that this refinery will start in the next 2 weeks. This is contained in a statement signed by the Chief Corporate Communications Officer of NNPC Limited, Mr. Olufemi Shoneye. Still staying there with the President Bola Tinubu's execution of policy directives to improve the investment climate in the oil and gas sector in Nigeria through he initiated the amendment of primary legislation to introduce fiscal incentives for oil and gas projects, also reduce contracting costs and timelines, domesticize industry players, and they say industry players in the domestic front are saying that they are anticipating a better operational environment. One of them, the Chief Executive Officer and Managing Director of First Exploration and Petroleum Development Company Limited, Mr. Ademola Adeyemi, believes that there's yet a lot to be done, but this is in the right direction. It was in our program earlier today, that's Business Morning.
The PIA was enacted, put in place. The law came in 2021. That PIA was not the only thing that was required. It required other enablers. And what you see in what the President has done is building on that platform of that law and putting all the enablers in place. You've talked about fiscal incentives, which is really making the project we want to do bankable. So at the end of the day, they're major investments and we want to get returns from them. It's improving the contracting cycle, like you've said, and just strengthening Nigeria's ability to be a preferred destination for investments. So I see it as continuous improvement. There's more to do, but it's putting wheels behind that act that was passed in 2021. Threshold has gone to $10,000. Before it was $10 million. Before it was $500,000, it was $2 million. We've gone to 10 million, which means that we can move faster in our contracting. We don't have to go through a long contracting cycle that involves our partners. That's a big one. Local content. If you look at the local content, it was a good plan and good for Nigeria. It enabled companies like First TMP and service companies to actually emerge. But then we need technology. And sometimes all that technology does not sit in Nigeria. So we must be able to actually attract external technology, new companies to come into Nigeria to compete, and don't let our local content laws become a hurdle for them. So when you look at all of those things, they are making all of these things possible. And then when you say fiscals, there's a 25% tax incentive that's been put in place. Though all of those things, when you take the combined effect of those fiscal incentives, of the tax incentives and all of that, I'm saying in our projects, we can already see a 20% uplift. And what that just does is it gives momentum to raising finance, and also it makes it bankable for us to run faster.
Yeah, well, looking at how to boost that oil and gas sector, but let's move away from the oil and gas sector for just a moment and talk about small businesses. A report by cybersecurity firm Sophos has revealed a surge in attacks on small and medium businesses globally, not just in Nigeria. Unlike governments and big companies, small businesses are becoming more vulnerable. Well, let's look at some of those areas or gaps that are exposed to cyber attacks and how small businesses can protect themselves. We have a risk expert joining us right now. Adedamola Bobade joins us virtually. Hi, Ms. Bobade, good afternoon. Thank you for your time.
Hi, good afternoon. Thank you for having me.
Yeah, so that finding actually focused on small businesses, which we know for a lot of developing countries, small businesses is actually the blood for development because they make up more of activities, economic activities, even though in their small numbers of values, but they still make up a whole lot more. What are some of those risks that they're exposed to?
Okay, so I would say when it comes to cyber attack right now, I would say lack of awareness about cybersecurity and its importance. I would say that when it comes to cyber attack, I believe awareness and education are important, especially among small business owners. I think that one thing that people need to understand is that whether you are a large enterprise or a small organization, you are at risk if cybersecurity is not prioritized in your organization. You see, many business owners constantly put themselves at risk because they don't understand the importance of cybersecurity. They probably feel like the organization won't be affected because, they are small or they are at their early stage of starting the business. And I believe that this is a wrong mindset to have, and it's kind of a mindset that puts such small and medium scale organization that put them at risk of getting attacked by cyber criminals. Another thing I would say is that businesses that are probably just aware about cybersecurity and its importance and are open to putting the right structure in place often have fewer resources and lack security expertise, which make them vulnerable for to cyber criminals taking advantage of their lack of adequate security infrastructure, and this can cause a breach, for example, or a cybersecurity breach or risk breach as well. And it can compromise their accounts. You see that money that they are not willing to spend right now to put the right structure in place. When there is a cyber attack, they would actually spend that money, or even spend something they will even have to spend more than how much they're not willing to incur right now. And I'll also say finally, let's say they are aware that they have the resources or they're willing to put the infrastructure in place. I think frequency is something that needs to be emphasized. This will involve conducting regular cybersecurity training to ensure that every business owner, especially small business owners, and their employees are aware of the current security regulations and infrastructures that need to be put in place. And one thing I would say lastly is that cyber attacks do not appear once. So regular checks and updates are really important to prevent this from happening and to prevent small and medium scale organizations at the target of cyber criminals.
So I hear you about the need for enlightenment and education and all of that, but what are they using? What are the hackers using to get to these businesses? What gaps have the businesses left open?
Okay, so I'll say two gaps actually comes to mind right now, and the first one is the exploitation of human error. Human error is the most common reason for cyber attack and data breaches, and with studies showing that it is responsible, it's an individual responsibility actually to protect ourselves, using the right password. And a breach can be caused by employee accidentally sending sensitive information to the wrong email, losing their company's smartphone or laptop, or using default password. In my line of work, I've had to deal with incidents where employees misplace company smartphone or laptops, or even just are not sensitive, or they're not keeping confidential information as they ought to. So I feel just that human error and thinking that you can just not take the necessary steps that you need to take. Yet, despite this risk, many small companies do not have like the necessary control. They still do not have the training. They need to train their employees. They need to expose them. They need to inform them about, okay, this is what, if you do this, this is the consequences, and this is how it's going to affect the business. So I'll say another thing is weak password usage. Understand as small organization need to use different platforms. It could be for operation purposes, it could be for communication, or if they want to purchase materials, for example. So it can be really challenging to maintain different passwords, which I mean, ideally, that's like for security purposes, they should not use the same password. The employee they could use easy to guess passwords, such as password 123, that's an example that comes to mind. Or they could use the same passwords across different accounts, or they could share their passwords with their fellow colleagues, and that is really not like a really good thing to do. So just using the same passwords or sharing passwords across accounts, this can give like an opportunity for hackers to exploit small and medium scale organizations. They become vulnerable, and this really makes the business vulnerable.
Yeah, so I hear about the passwords, making it as complicated as possible and secretive as possible. But you also cited one example, which is what if somebody loses a laptop, a computer, a phone that has sensitive information? What first steps can an individual take to protect such?
Okay, thank you so much. Like I said, in my line of work, I've had to deal with like similar incident. I think one thing that small organizations, what they need to put in place is to ensure that they put the right structure in place. For example, if an employee like loses his laptop or it was stolen, for example, they need to understand, okay, this is like maybe the IT that I need to call. Do I need to report to my manager? Within how many days do I need to report to my manager? So the first step is, okay, report to your manager, and that right structure needs to be put in place, because if the organization doesn't put that structure in place, then the employee will not know what to do about this. So putting the right structure in place to ensure that, okay, when I've noticed that this incident has happened, I need to reach out to my manager about this, then the manager will reach out to the IT team to ensure that, okay, if the necessary steps need to be taken to ensure that these cyber criminals do not get access to the phone or to the company's laptop. So I'll say that's the first step. Just putting the right structure in place and to ensure that employees are educated on the structures that are being put in place when they find themselves in this situation.
So you keep saying putting the structure in place. We know, for small businesses, every cover is a big money. So, like, how much investments should small businesses be looking to protect their data?
I would say there isn't an exact numerical amount or percentage of revenue or IT budget that a growing organization should dedicate to security. Rather, I would say that the right level of security depends on several factors, including the location of the organization, the setup that the organization or the small business is in, the type of data like they handle, and the type of data that they store, and the regulatory requirements that the small organization needs to abide by, and the complexity of like its IT infrastructure. So organizations that hold sensitive data should spend more money on data security. So cyber criminals, having access to confidential information can affect the business continuity. So, I'll just use an example. If small businesses, like there's the client that shared really confidential information. Confidential information could be address, could be bank statement, which obviously this is not made known to the public. If they have access, if cyber criminals have access to that, it will actually affect the integrity of the small and medium scale organization, and the client won't want to work with such an organization anymore. So the right amount, I won't say, okay, this is the exact amount that needs to be put in place, just depending on how sensitive the data that they have access to, how sensitive that information is. Then based on that, they can decide, okay, this is how much I need, or this is the right amount of budget that needs to be put in place to ensure that this doesn't happen, our client's information doesn't get out there, and it should not affect our business continuity.
Yeah, so your reports or research gave attention to female participation, especially in tech. And how has that been? What's the trend in that?
According to a report by the World Bank in 2024, women make up to about 1/3 of the world workforce in technology-related field. So currently, women make about 37% of the tech workspace. That's a significant improvement, to be honest, when you compare it to the early 2000s, where where women make only about 9%. There's been a great improvement, and I believe that there is room for more. In this season, we are seeing initiative to ensure that we achieve our goals and in empowering women and allowing more women in the tech space. I think there's an initiative about it's about cybersecurity, where girls are being trained and just having the right knowledge and the skills that is required for them in future. So we are not there yet, but initiatives are being put in place to ensure that we get to where we want to be. But comparing to how it was before, I think we've really done a good job.
All right. Thank you so much, Adedamola Bobade, risk experts, for sharing those tips, especially with small businesses.
Well, thank you for having me.
We'll head to the markets in just a moment, so let's take a break. When we come back, Anita Edet will be here for the market. Welcome back. Still watching Business Incorporated right here on Channels Television. We'll head to the markets now to get intraday numbers for most of the markets, but I guess for Asia, we're going to have the closing market. Anita is here with the numbers. Hi, Anita.
Yeah, hi, Anita. Thank God it's Friday.
Yeah.
Yeah. Well, let's just say that we start with the Trading Day Africa, which we start with Nigeria's, of course, charity begins and so on. That's what they said. For Nigeria's stock markets, we had a bit of a pullback. We've been enjoying 4 days of consistent.
Since last week, actually.
Okay, so
last week we've been on a bull run.
Yes. And of course, yes, we climbed back to as yesterday we went to about 104,000.
104, yeah.
Exactly. But take a look at your board there. We've retracted a little bit, some bits of profit taking at intraday session. But of course, you will be giving us the details of the market.
Yeah.
Okay. So let's talk to our viewers or who are watching us across the world now. Take a look at your board there. Trading Day Africa, many of the major stock markets on the continent, that's what the 4 of them is what we actually track at intraday. So as you can see, just a tad 0.07% pullback for Nigeria's stock market, the NGX ASI, the all-share index, within the 103, but just a slight drop. It might rebound, it might go on the other side, but we'll take a look at how it ends the day after 2:30, which is Nigerian closing time. For the JSE, that's the South Africa Stock Exchange, it was just a tad up 0.02%. We had positive sentiments across other segments of the market, where we see Egyptian Stock Exchange being in the green, almost 1%. And then Kenya Stock Exchange, wow, that's a massive 2.53% increase for that market. And we're still talking about Nigeria's market, like I'd always say, but this time on the fixed income side of the market. At first, we saw treasury bills. We talked about the treasury bills yesterday, where we saw another, the interest for Nigeria's treasury bills market is really increasing. Another oversubscription from the treasury bills auction. But at this time, we're also talking about inflation. Inflation has been dominating the headlines this week across the United States, across Ghana, our neighbor here. But then for Nigeria, as at about 12:40, the National Bureau of Statistics released the inflation numbers, which came out quite higher, slightly higher than a forecast made by Financial Derivatives Company, which is an economic think tank and economic advisory group. It came out at about 31.7%, in contrast to what the FDC had projected, which is 31.04%. Now, let's get the deeper sense of this, as well as government's borrowing plan, where the government is announcing that by the middle of June, they will be floating a Euro bond. So now let's talk to Caleb Alimi, Chief Dealer at Providence Bank, for more details on this. Thank you for joining us, Caleb.
Thank you for having me, Anita. Good afternoon.
Okay, now, so I have a couple of questions for you, but I'll start first with the inflation numbers. I'm sure you've seen how the numbers have come in. These numbers are quite massive, all the way from 29.9%. Yesterday, I had a discussion with Ladi. I said, I don't think it should. But, whoa, it came out about 31.7%. So now, how is the market reacting to these latest numbers from the National Bureau of Statistics?
So interestingly, the market is not too far off from from the actual market expected about 31.3, 31.5%, and it has come out at 31.7%. There isn't any midday reaction currently from the fixed income space. Market has largely, priced this in. I think for the fixed income space, market will be looking towards policy direction from the Monetary Policy Committee at the next meeting, which is, at the end of the month. That is where market will take most of its guidance from concerning inflation. As I said before, we already expected it to print higher. I mean, it's getting closer to what we sort of feel in the market, what we feel in our pockets, when we go out to purchase things on the street.
Okay, so now let's take a deeper feel at the inflation numbers. If we can have it on our screen there, we see from the food index, the core index, the urban index, all in the upside. If we can put that up on the screen so that our viewers can have a feel of what the numbers are talking about. So now, Caleb, I want you to really take a look at these numbers because it has to do with Nigeria's economy, especially when you look at food, you're looking at transportation, you're looking at other services. So now, what is the overall? What does this translate to the fixed income market in general? Because at the moment, the effect on the naira, the naira is. I don't know what the naira is doing right now. So maybe you can give us details about how the naira is trading at intraday in relation to this inflation numbers, or if it has any impact.
Well, naira hasn't reacted to its intraday, but let me speak to it in sense of, the exchange rate. We could tell that the Monetary Policy Committee, at the last meeting, have said they're focused on inflation targeting, and we've seen that actually in the money markets. They've been very hawkish, which means they've been adopting a contractionary monetary policy stance. And what that has done is it has stabilized the naira at around the 1,600 handle. Over the last, 2 weeks or thereabouts, the naira to dollar exchange rate has just been stabilized around the 1,600 handle. Even NAFEX and NAFEM are, just within that band between 1,605, 1,608 and thereabouts. We expect that will continue. But like I said, what we expect the Monetary Policy Committee to do, and to probably reflect on interest rates from the fixed income market is to inch up. We saw that at the last, the NTB auction before this one, the real return was about 28%. But at this one, it dropped to about 27%. So we expect that, given the next auction, there's a bond auction on Monday, and we would see that impact because investors would demand higher interest rates at the auctions. And then for the Nigerian Treasury bills, which will hold, a fortnight from now, we expect those yields to also inch up, maybe around the 30%, real return.
Okay, so that takes me to my final question with you, and it has to do with the Eurobond. The last time Nigeria tapped into the Eurobond market was in 2022. So after a 2-year hiatus, following the examples or following the likes, its other country counterparts, Benin Republic, Kenya, and Ivory Coast, Nigerian government says it intends to float its own Eurobond by June this year. So my question is this the right timing given the state of the country's forex challenge that we're facing?
I think it's great timing, really. Like you mentioned, Benin, Ivory Coast, and Kenya have already come to the market. And then I think it's great timing for them to expect it in June, because you have to look at it from the perspective of the U.S. markets. The U.S. markets, interest rates in the U.S. market determine general dollar rates, right? So Nigeria currently, between last year and this year, we could find that our Eurobonds have contracted significantly. On the average, about 350 basis points between where yields of our Eurobonds were last year versus where they are this year. Now, Nigeria has said that it will come in June. Expectations at the U.S., Federal Open Market Committee, which also determines their benchmark interest rates, will be meeting later this year, and the expectation is that they will begin to ease from the second half of the year, which is around that June-July period, right? They would have a meeting in May, and market expects that they will begin to cut their interest rates from that period. So Nigeria targeting June, means that Nigeria targeting Jones means that interest rates should have started coming down globally, and we may even be able to raise cheaper than where interest rates are currently on the global front. Now, that helps us even as a nation, because that dollar inflow is also going to, increase the arsenal of the central bank to be able to defend the currency, and also help the government in generating more money to also invest in infrastructures locally. So it's great timing in my view.
Okay, so thank you so much for that analysis, Caleb. And of course, we look out for how the market will end just as these inflation numbers have been released. Thank you. So that was Caleb.
Thank you for having me.
Chief dealer at Providence Bank, with details of the fixed income market. Now, U.S. stock market. We take a look at the board. For the U.S. futures, the futures were in the green, of course, and this is coming after the government released the producer price index, which came out hotter than expected at 0.6%. But let's have a review of Thursday's trading on Wall Street, and we have Maribel to give us details of that.
The U.S. stock market ended lower on Thursday, as many investors were concerned about the hotter-than-expected February report about inflation. This has caused many to be concerned, as the Dow Jones was down at 0.4%, the S&P 500 down 0.3%, and the heavy-tech NASDAQ was also down at 0.3%. This has many investors concerned as to what this will mean for the weeks and days ahead, specifically how the Federal Reserve will respond, if they will still show that interest rate hikes could be in the rise, or potentially cuts, but much later than once expected.
That was Maria Bird, Washington, Channels TV, Washington correspondent on the U.S. markets close for Thursday. Now, to wrap up the market segment, let's take a look at your board. The Asian markets, they were in the red, closing Friday on a lackluster mode, and this is because most of the investors there reacted to the producer price index numbers, which measures pipeline costs and so many other raw materials as well as finished goods. Most of these Asian countries, they are producer countries, so that's what happened. The impact riveted across the Japanese Nikkei 225, the South Korea's Kospi 1.19%, and the Hong Kong's Hang Seng Index 1.42%. On the other side of the market, for Shanghai, that's the Chinese market, it was in the green. That's the lone gainer there, 0.54%, more than 0.5%, while Australia's ASX 200, Australia's stock exchange top 200 companies on the Australian stock exchange, it was down by 0.56%. So, that's all the market in a nutshell for Friday, and I will look out for Nigeria's close for today.
Yeah, certainly we'll look forward to that. And as you said earlier, it will be on at 10 p.m. Yes. I'll be giving that report. Thank you so much, Anita.
Look forward to it. Thank you.
Let's go to Europe now, where the European Commission has said that it opened an investigation into the AliExpress, an international e-commerce website run by Chinese tech giant Alibaba. Remember, the relationship between EU and China is becoming not so friendly anymore. But let's have Ekrem now join us from Berlin to give us the details of this and more. Hi, Ekrem. Thank God it's Friday.
Thanks for having me, Ini. The European Commission opened a formal investigation into AliExpress of Chinese tech giant Alibaba over concerns surrounding the dissemination of illegal content. The Commission, the executive arm of the European Union, opened a probe into AliExpress under its landmark Digital Services Act, or DSA, which came into effect this month. The wide-sweeping legislation aims to keep tech giants in check in areas from anti-competitive behavior to ensuring misinformation is not rife on their platforms. The Commission said the investigation focuses on whether AliExpress may have breached the DSA in areas linked to risk management, content moderation, and complaint handling. The company's advertisement transparency, recommender systems, and data access will also be under scrutiny. This formal probe against AliExpress, on the other hand, gives Brussels the power to dig deep into the platform's internal documents, processes, and to take testimony.
So what practices of AliExpress will be looked into?
Well, the EU Commission officials said it is acting after identifying likely failings by AliExpress to prevent the sale of fake medicines, to prevent minors from seeing explicit content, to stop affiliated influencers pushing illegal products, and other issues related to user notifications and data access for researchers. The Commission will look at whether there was a lack of enforcement of AliExpress's own terms of service, which prohibits certain products that pose a risk for consumers' health. Other areas of the probe include how AliExpress recommends products to users and whether the e-commerce site complies with a rule that allows a searchable repository of ads that are provided on the platform.
Investors now, I wonder if there's a share of AliExpress involved.
European traders and investors are bracing themselves for a sell-off on Friday as they adjust to the prospect of later and fewer than expected Fed rate cuts this year. Higher than expected US February producer prices index figure, which is 0.6%, eroded expectations of a June Fed rate cut. On a year-over-year basis, the headline producer price index increased 1.6%, and that is the biggest move since September 2023. Today's market mood will also be dominated by the consumer price inflation figures that will come from France and Italy. France, Europe's second largest economy, is now set to record zero growth in the first quarter, compared with a previous estimate in February of 0.2%.
All right, Ekram, thank you so much for those details. All right, let's come back to our continent, Africa now, starting with Nigeria. Those inflation numbers we've been referring to came out just a couple of minutes before 1 today. In February, the headline inflation rate increased to 31.70% relative to the January 2024 headline inflation rate, which was at 29.90. Looking at the movement, the February 2024 headline inflation showed an increase of 1.80% when compared to January 2024. So that's month-on-month inflation increased by almost 2% from January to February. And then the headline inflation rate was that's for January to last year, it was 9.79% points higher compared to this time last year. That's for year on year. And the headline inflation rate was 9.79% points higher compared to the rate recorded in February 2023, which was 21.91%. This shows that the headline inflation rate year on year increased in the month of February 2024 when compared to the same month in the preceding year. Furthermore, on a month-on-month basis, the headline inflation rate was 3.12% higher than the rate recorded in January 2024. This means that in February, the rate of increase in the average price levels is more than the rate of increase in the average price level in 2024. Well, let's not forget that the Central Bank of Nigeria is still holding on to that inflation target policy, and we are supposed to have 21% by the end of this year. We move over to Ghana, where Ghanaian authorities and international bondholders expect to begin talks this week, even though the week is almost over, aimed at a deal to restructure roughly $13 billion of defaulted global debt. A group representing the private investors and government officials are set to hold meetings, kick off negotiations over the coming days. Creditors entered into non-closure agreements with the government this week. That signals the first step in the process. Bondholders are weighing a proposal put forth by the government, but they have maintained tight lips on the details of that offer. I'm sure in the coming weeks, we will certainly get details from the investors and, of course, the government. From Ghana to Uganda, where the shilling remains unchanged on Friday, with importer demand for hard currencies suppressed by mid-month taxes, and also commodity flows offer some support in that regard. Commercial banks put at the shilling at 3,880 to 3,890, the same level as it was on Thursday at the close of market. For about a week now, Uganda's depreciating currency has been threatening to bring some complications to the country's economy. The Ugandan shilling, which experienced an abrupt decline against the US dollar in the previous month, has brought about more inflationary pressures as a result of the Bank of Uganda, which has projected that inflation could go past the 5% target come the second half of the year. We move to Kenya now, where doctors there at public hospitals began a nationwide strike Thursday, accusing the government of failing to implement a raft of promises from a collective bargaining agreement signed in 2017 after a 100-day strike that saw people dying from the lack of care. The Kenya Medical Practitioners, Pharmacists and Dentists Union say that they went on strike to demand comprehensive medical cover for the doctors, and because the government is yet to post 1,200 medical interns. Dr. Davji Bimji, Secretary General of KMPDU, said that 4,000 doctors took part in the strike despite a labor court order asking the union to put the strike on hold to allow talks with the government. Dr. Dennis, who is the Deputy Secretary General of the union, said that they would disregard the court order, same way the government had disregarded 3 court orders to increase basic pay for doctors and reinstate suspended doctors. He said that medical interns make up 27% of the workforce in Kenya's public hospitals, and their absence means more sick people are being turned away from hospitals. Some doctors, however, have remained on duty to ensure patients in the intensive care do not die. Still in Kenya, earnings from goods exported to African countries exceeded expenditure on imports by a record 164 billion shillings. That's about $1.22 billion. That's in 2023, according to provisional data. This shows boosting the government's renewed push for integration of markets on the continent. The value of goods sold to other countries in the continent amounted to 431.89 billion Kenyan shillings. That's about $3.22 billion last year, growth of 22.99% over the 351.16 billion shillings. That's $2.62 billion the year before. The increased earnings came at a time when expenditure on imports remained largely flat, rising a measly 0.3.1% to $267.86 billion. That's about $2 billion, according to data collated by the central bank. The slimmest rise in the value of merchandise orders since the COVID-induced fall in 2020 helped nearly double 94.98% Kenya's surplus in trade with continental pairs last year from 84.13 billion Kenyan shillings a year earlier. Still staying in that East African country, Kenya has been ranked at the top position in the 2023 Eastern African Youth Digital Readiness Index, followed by Rwanda and Uganda in second and third positions, respectively. The report indicates that Ethiopia and Tanzania ranked 4th and 5th, as Sudan, DRC, and Somalia occupy the 6th, 7th, and 8th positions. Kenya leads the pack in Eastern Africa because of its widespread mobile money system, government investments in infrastructure, and initiatives focused on digital literacy. However, it still faces challenges of unequal access to technology, especially in the rural areas, which are a common hurdle across the region. The new 2023 Eastern Africa Youth Digital Readiness Index by Kala, which is a digital transformation and innovation management company, analyzes factors such as digital skills, government support, and online safety. Its goal is to identify areas for improvement and promote collaboration across the region to bridge the digital divide and empower young people. Well, let's leave Kenya or East Africa and go to where Ethiopia and Canada are poised to strengthen trade and investment cooperation following high-level talks between Ethiopia's Foreign Minister Taye Atsi-Selassie and visiting Canadian Parliamentary Secretary to the Minister of Foreign Affairs Robert Kilfart. In a meeting, Canada and Ethiopia agreed to fortify bilateral relations, particularly focusing on trade and investment avenues. The discussion also covered regional, continental, and international issues of mutual importance. Ethiopia's importance as one of Canada's key African partners notes its prioritization within Canada's foreign relations strategy. That's according to Ethiopia's foreign ministry. And the discussion will also focus on their mutual dedication to tackling global challenges, promoting shared interests on the diplomatic front. According to the Canadian counterpart, during his two-day trip, which ends today, Friday, March the 15th, they will also meet with officials from the African Union Commission to deepen relations and work together on shared priorities. Now we move to Zimbabwe, where the business sector has reported a decline in activity since the announcement of the 2024 national budget in November last year. Most firms found the 2024 national budget burdensome due to its high measures headlined by an unfavorable tax system. The president of Employers Confederation of Zimbabwe, Demos Mbwaya, states that companies must adapt in order to survive the tough environment. Mbwaya said some of the issues lined up with social partners include production, bipartite, social contracts, current power crisis, and uncertainty caused by export permits on the mining sector. There's also the review of tax measures and high interest rates, among other issues. He notes that Zimbabwe needs to rely on locally produced goods and services to accelerate domestic production in the spirit of import substitution and self-sufficiency. We're still in Zimbabwe, where the government has said that it would allocate at least 5% of national revenues to provincial and local authorities to catch up on its promises to deliver on United Nations development goals. This was said by the Deputy Chief Secretary to the President and Cabinet, Paul Damasani, during the Zimbabwe United Nations Sustainable Development Cooperation Framework, the result of a joint annual review meeting. He said government has embarked on a deliberate initiative to devolve governmental responsibilities to provincial and local authorities. We end up our trip round Africa in Egypt, where the Egyptian government has signed 7 memorandum of understanding with international developers to set up green hydrogen and renewable energy projects in the Suez Canal Economic Zone. The MOUs were signed, according to the Minister of Planning and Economic Development, Hala Al-Said, represents a new step for the fund in the series of investment partnerships with major international companies to develop green hydrogen projects in the zone. A trip around Africa, but let's head to the crypto market now and see what's interesting right there. Bitcoin has been surging for some days, but then we saw that everything that has a beginning certainly has an end. But the market is still in extreme greed at 83 index point over 100. But let's look at the prices, the price of those coins at this time, or not this time, but about 30 minutes ago, just before the program started. We saw Bitcoin was going between 67, 68. In fact, I think it got to 66 at some point, but we see that it's recovered a bit to 0.73% at $68,084 right there. Ethereum also got to 4,000 sometime this week, but we see it at 3,693 right there. BNB also gained, Cardano also gained, as well as XRP. Now let's see the headlines for crypto at this time, some of those top stories. We see that Bitcoin tumbled. That was one of the stories that we have. Can we have the other stories? There you go. JP Morgan says investors are buying gold and Bitcoin. And I know that gold is gold. Gold is gold globally. But is Bitcoin competing with gold? Well, I don't know. I wish that our guests would be able to say something about that. Then Bitcoin's correlation to NVIDIA is strongest. And of course, this is NVIDIA is captured, major mover for a couple of weeks of NASDAQ, that's of the U.S. market. Also, now we are seeing that they have a strong correlation. I wonder what that means. But let's have Olumide Adeshina join us now. Hi, Olumide. Good afternoon.
Yeah, good afternoon. Thanks for having me.
Good. Please, what's the price of Bitcoin now? Because it was doing between 67, 66, 68 by the time I was coming. What's it at this time?
Yeah, the last time I checked, I think it was around that price too. And that just tells you that the market is correcting itself. Bitcoin has been running the past couple of days. Yesterday, it actually hit its all-time high, close to some 4K, before losing about $7,000. And that was prior to rumors that the U.S. Fed might not cut interest rates in their next meeting, and that got highlighted with the latest inflation data report in the United States. It recorded uptick, so it means that the U.S. Fed might likely cool up. And also statements from powerful financial titans like James Dimon warning the U.S. Fed not to take into their dovish optimism also clouded the appetite for risk. So we're seeing that hitting the crypto market. And when Bitcoin stutters, the market really crumbles. And that's really why, despite the rally in meme coins and altcoins, we're seeing the market cooling right now. You spoke about the correlation between NVIDIA and Bitcoin. Interestingly, you see Bitcoin's year-to-date is about 68%. And you look at NVIDIA also, it's the best performing stock on the S&P 500, and it also has a return of over 70%. But market technicians will tell you that at some point it looks like it's at an overbought position. So we expect some retracement, and with this narrative that the US Fed seems to be cooling the appetite for risk, who knows the forecast of many critics that Bitcoin might fall below the critical support, as we see 68,000 to downwards of 65, then 60. But right now, you cannot beat the inflows coming from Bitcoin spot ETF at great volumes, and that's really what's propelling the Bitcoin rally right now. It's halving coming next month.
So when we talk about the price of Bitcoin, do you see a rally meeting a rally? I mean, I guess we're expecting a rally with a halving. So do we see that impact meeting the current rally, or one cools down and gives some time before the next could pick up?
Yeah, so I think personally, I think what we're going to see in the coming weeks is that the Bitcoin and Bitcoin halving is really going to take the center stage, because it's really going to make it's more harder to mine the asset, and the rewards will definitely become more difficult. So that really creates some form of value. And you really spoke of the fact that gold, known for the store value and being used by a lot of investors to hedge against fiat inflation, Bitcoin has taken that attention. So what really will make the difference is if traditional investors, particularly from trillion-dollar asset managers like BlackRock, Fidelity, Invesco, keep their buying pressure on the asset. And that's why, like they say, Wall Street has taken over the Bitcoin market. So I think the momentum is on their side. Any coup on that side definitely will send Bitcoin back to the room. But right now, I think it's still fair to say the bulls have the.
All right. Thank you so much, Olumide, for that. And I guess we'll also have to watch and see why JP Morgan is comparing the buying of gold and Bitcoin. But I mean, that's a conversation for another day. Thank you so much and have a great weekend.
Yeah, thank you for having me.
All right, so that's how much we can take on Business Incorporated today and for this week. Thank you so much. We really do appreciate your presence, always being there, making it worth a while to be on this side of the divide. Let's do it again next week. And don't forget, you can always watch any of the episodes, whether you missed it or you just want to repeat it. You can go to our YouTube channel and you would get. But I'll be back at 10 p.m. For the stock market report. Ladi Williams will be giving you a summary of market activities 7 p.m. tomorrow during Capital Market. Do have a great weekend. Bye-bye.